Okay, welcome to the Forex is easy training video. Just a quick video to give you a brief overview of what I've been doing this week. I'll post this on YouTube. Hopefully the quality will be alright. The colours may be a bit skew-if. I don't think the pivot lines on the chart will be that clear, but the other indicators are all good, I think. Yeah, if you go to the post below this one, once I post this video, it'll give you the exact setup of the charts. I don't want to go through all that again. Here I've got a Euro USD 5-minute chart. Hopefully I'll keep it all in the picture just to give you an idea of how the what I'm looking at and how the indicators work. So I'll just click on here and bring it along a bit. I'll just look for a place in the chart where it's obvious. Bring my crosshairs on. Now remember what I said, these custom indicators I've got on the chart is there's two of them. There's the slope direction line, this red and blue looks like an MA, but it's just gives me an idea which way the market direction is going. And those little red and blue arrows, where is it? What are they called? Just need a name. Trend signal. These little red and blue arrows. As I said, they're in the post below. They're custom indicators. They're freely available through, if you just Google them, you'll find them somewhere. And again, they're just an indicator of giving me an idea which way the trend is at the time. Maybe consider them an early warning signal or something like that. Now with the pivot lines, you probably can't see them too clearly, but believe me, price does bounce around pivot lines. They do change every day because they're renewed or reset at the start of the day, which for me is I think it's 8 o'clock in the morning. When my charts tick over, that's 8 o'clock my time, local Queensland time. Now the indicator below is the Laguerre, Laguerre. It's a custom indicator. Again, it's freely available, and again, it's explained on my below post, as I like to call it, the lag. This is probably my main indicator. Now what I'm looking for in the lag, as I'll call it, is just see how I've got a red line here at the 0.85 and a red dotted line at 0.15, the low and the high. These other white lines, horizontal lines, are just indicators. I like that just to see if the trends change, just a visual thing. Now if you look at this example where the crosshairs are, see how the lags come from below the 15 and broken up through it. If you look down at the stock, the stochastic's already turned up, so there's an early warning signal there. The blue arrows come on that candle that's broken through, even though the slope line's still down, and it actually bounced off a pivot line here. So once it's a confirmed breakthrough of that lag to the upside, I'd be going long. And as you can see, it goes up nicely, Now the stock does this stochastic, again that's explained in that post below. It's another sort of indicator I use. When it crosses to the downside, I'll look for the crosses in the stock. When it crosses to the downside, that's when I might think about taking profits or jamming up my stop a lot tighter. But as long as that lag stays above that red line, it's gone from below the bottom one up through the top one and stayed up there. It's had a little pullbacks and there's been red and blue arrows back again, but the slope line's up. Stock's a bit ugly. Yeah, and we'll go across to the right here and you see we've got the lags broken down through. Had that red, stock's heading down, lags broken through the top, go short, and it stays down, up, up. I'll see if I can find another example where it's nice and clean looking. You know, it's not perfect like any technical indicator, but it certainly helps. Here we go, where it's gone down, stock's heading down, nice downward move. The lag stayed below that bottom red line and the trend stayed low. We're below the red slope indicator line, and when we turn up, here it comes back up through the 15, 0.15, the bottom red line. You can already see the stock's turning up and up up she goes slowly. Had a bit of a hiccup in this area here. Again, tight stops, or get out of the trade and get back into it again when the lag turns back up again and your stock turns back up. Follow it all the way up. There was a couple of other reasons I use this stock. One's divergence. See if I can find an example for you. It's pretty, going back a fair bit here. I'm just I haven't planned anything out here. I'm just winging it. So as you can tell, might go back up to the tonight. See if I can find an example of divergence. Nothing obvious. And all I mean by divergence is, oh no, I lied. It's when you get a difference between the actual price in the chart and the price in the stock. Say we have a low, I'll see if I can find an example. There's got to be one somewhere obvious. Here we go. Alright, see how we had that low on the stock, on the Forex, on the chart here, and we had this low on the stochastic, no problems, and we had this bit of a pullback where it's come back up again, and it's turned back down, and see how we've got a obvious newer low. It's obviously a lot lower than that previous low. See, it's come down right here. But if you look at the stock's only come down there. So if you draw a line from there to there, I'll bring up a line drawing tool from there to there. See, it's definitely downslope, and we do the same here. Now see how the price is going down, but the stock is going up. That's divergence. They're different. Now, if I saw that and then it starts turning, I'll bring up my crosshairs again. Starts turning back up. Price starts heading back up, and the stock starts turning. Good chance there's going to be a nice run in the opposite direction with price. The stock is a better indicator than the actual price. Not 100%, but it's a good high probability trade. And see, our price has just gone up nicely. So we've got a low there, a lower low. Here we've got a low and a high low. So it's difference in price. It works to the upside as well as does the downside. Okay, let's just give you a bit of an idea. This is not an exact science using these indicators. You just got to watch the pivot lines. Look at these, the line, the trend signal, the arrows, the line. Ligure or lag is probably your most important one. That's for me anyway. And look at the stock, see what it's doing. Yeah, if the stock's going completely opposite way to you're going, it's probably a good time to get out or really consider your position you're in. And it might just pay just to have a quick look at a high time frame chart. I've just skipped up to a 15-minute chart. I'll bring up an hour chart. See, you look at the hour chart, you can see the price is going up, so you might only want to take 5-minute trades to the long side, give the short side trades a miss. So hopefully that's just helped you a bit. This week I've done 3 days of trading, Monday, Tuesday and Wednesday, using these methods. Been mainly the euro, but I've had a look at the GBP and also the Euro Japan and the JP, just the yen. Monday profit plus 30 pips, Tuesday plus 12 pips, and today I think I'm finished trading for the night. It's 9 p.m. my time, plus 27. So what's that? 57, 60, 69 pips for the 3 days. So can't complain about that. Oh well, that's it, guys. Remember, this is going posted on my Forex is Easy blog from YouTube. Thank you.